Banks pursuing growth by modifying their historical lending tactics can focus on two areas. One is specialized lending, and the other is segmented lending. Specialized lending involves the conveyance of credit to commercial customers through government-guaranteed lending programs such as the SBA programs and the USDA programs, available to extending commercial loans to business enterprises, as well as asset-based lending, which is a country cousin of commercial lending, but involves a different underwriting and securities collateral format. Segmented lending, on the other hand, involves a formation of a tactical plan to approach distinct industry categories naturally available in the banking company's home market. Examples include specialized lending teams approaching the hospitality industry, the medical services and care industry, senior living as an example, specialized lending teams approaching the professional community in the form of lawyers and accountants, and other natural corridors of employment and industry available in your market area. Amplifying earning asset and income growth through specialized and segmented lending strategies does involve a rethinking of the classic strategy community banks and regional banks employ. This comes about as a result of worldwide monetary policy generating epically low levels of interest rates available on both securities and loans, compounded by the fact that the spread between the yield available on bank qualified securities and that available on the general commercial loan portfolio is at its epic high. This influences banks to achieve growth through commercial lending, yet commercial lending in the form of commercial real estate and construction and development loans is being tacitly limited by regulatory dictate to a non-concentrated or overly concentrated segment of the overall portfolio. This drives community through regional institutions to pursue C&I lending, yet the I component of C&I lending, that being industrial lending, is only available to the largest banks generally in the country, the super regionals and the so-called money center or too big to fail institutions. Thus, the general banking industry is focusing on commercial lending, and the way that many banks have adopted pathways and plans to achieve greater market share and heightened growth is to deploy specialized and segmented lending tactics. The classical risk involved with extension of credit is just that, credit risk as measured by provision expense and charge-offs. The industry endured a deep level of cumulative loss across all bank sizes in the recently completed very deep and adverse recession. This changed the definition of managerial best practices and also altered regulatory dictates on credit underwriting, credit process, and credit protocol. All these new measures need to be applied as they are to general household sector and commercial sector lending, equally to any tactic embraced by a company focused on specialized or segmented lending.